Hey everybody, it's Jack and welcome back. Today I've got an awesome video for you all. But first, I hope you all had an amazing long weekend. Hopefully you had to get some time to spend with family, recharge, and of course, eat some chocolate. But getting into today's video, it's a brand new month. So today I'm going to be going over my favorite 3 dividend stocks for the month of April. These are 3 very different stocks in completely different sectors that I think are great buys right now in the month of April. All 3 of these stocks are actually a balance between dividend paying stocks as well as growth stocks. So they all offer a slightly lower dividend yield, but have really great room to grow and appreciate in share price over the coming months. And I really think they are all great buys at today's prices. So kicking it all off with the first dividend stock to buy for April, and I would actually consider this more of a growth stock because it is the stock in the video that has the lowest dividend yield of the 3. This stock is in the technology sector and it's actually one of Canada's largest software and services companies. And funny enough, it is a company that I actually worked for a few years ago. But getting into it, the stock in question is Enghouse Systems, ticker symbol ENGH. Enghouse Networks currently trades at $60.70 at the time of filming this video. And you can see that it had a great day on Friday, up over 4%. So before Friday, it was actually trading around $58. And Enghouse Systems has a market capitalization of over $3 billion and currently offers a dividend yield of around 1%. So it is a smaller dividend yield, but the growth potential with Enghouse Systems is great. Over the past 6 months, it has dropped from around $75 per share down to where it currently stands, and over 20% reduction in the share price. So it's trading at a great discount currently. And if we go to the 5-year chart, we can see that it's been very steady growth and it's really started to accelerate over the past 2 years. And you can see that in July is when it ran up like crazy up to that $75 range. And since then, it's been pulling back down to a much more reasonable price and one that I think is a great entry point today. So I've got open the 6-month chart with 1-day candles for Enghouse, and you can see that over the past 6 months, it's been trading consistently within these 2 trend lines. So the bottom one here is the support level, and the top one here is the resistance level. And we're currently testing the resistance level right now around this just above $60 range. So I really think if Enghouse is able to hold above $60 in the coming week, where you might see a breakout and really start to see the stock start to head back in that upwards direction, like it had steadily been doing earlier in 2020. And keep these price points in mind. And remember, if it stays above the $60 range into the coming week, we might have a reversal and start to see it go up in that upwards direction. Enghouse has really seen some solid revenue growth over the past 5 years, with its compound annual growth rate for revenue being at just above 10%. But 2020 was really a breakout year for Enghouse when it comes to revenue, going up over $120 million from the previous year. So crazy growth in 2020, and I think they can continue this into 2021 as they continue to grow the cloud services and 5G solutions they offer. And if we look at the dividend per share growth, you can see that this has been compounding annually at a rate of 13%. So they're growing their dividend very strongly year after year. So by buying in now, you're not only going to get that growth, but also see that dividend growth as well. So taking a look at the analyst predictions for Enghouse Systems, we can see that it currently has 3 analyst ratings, 2 being buys and 1 being hold. But taking a look at the actual numbers, the low end prediction is at $69.25, which is an over 15% increase from the current share price. And the average prediction in the middle is at $76.61, a 26% upside. And then the high is at $80, over 30% upside. And we can see that all 3 of these ratings have come over the past few weeks. So they're all very recent. So that was our first stock, Enghouse Systems, which has been seeing some great growth and I think will continue to grow over the next coming months. And it does offer around that 1% dividend, which is more of just a bonus. So now jumping into our second dividend stock, this is one I'm really excited about, and I've actually been adding to my account over the past week. I've added a few shares and I plan to continue up and build up my position in the coming few weeks. This is a stock that I really think has room to grow. It's been hit really hard over the past few months, but I think it's going to recover really nicely. And I think the way the world is going right now and the stock market in general, I think we're going to start seeing some higher inflation rates. And that's going to cause this stock to go up, and I'll explain why. This stock falls into the mining sector, and it is a gold mining stock. So this is a great way to hedge against inflation as well as the market crashing. Usually people buy gold directly. However, this is kind of my play into the gold space without directly buying gold. I'm buying this gold mining company instead because they've been seeing really great revenue and profit growth. And like I said, they've been hit really hard over the past little while. So they're trading at a great discount today. And this is a stock I'm super excited for. So the stock in question, I won't leave you hanging anymore. It is Kirkland Lake Gold, ticker symbol KL. Kirkland Lake Gold currently trades at $44.28 per share. And when it comes to size, Kirkland Lake Gold is a mid-tier gold mining company sitting at a market capitalization of $11.8 billion. And they have a really nice PE or price to earnings ratio sitting at a modest 15.21. And finally, when it comes to their dividend, they currently offer an over 2% dividend sitting at 2.23%. And what I really like about their dividend is the rate at which they've been growing it. In 2020, their dividend actually tripled. At the end of 2019, their quarterly dividend payout was at 6 cents per share. In early 2020, they doubled this to over 12 cents per share quarterly. And then at the end of 2020, they raised this by another 50% to over 18 cents per share quarterly. So they've really been growing their dividend at a fast rate. And I see this as a really positive thing. It's showing that the company and the management team is really focused at giving shareholders value through the dividend. So this is just a huge perk when it comes to Kirkland Lake Gold. Now looking at their chart, if we look at the 6-month chart, we can see that their price in October was trading around $67 per share, and it's come down significantly since and is now trading around that $44 mark. And if we look at the 1-year chart, we can see that in late July, Kirkland Lake Gold was trading at over $73 per share. So it's almost seen a reduction in share value of around 50% since then. However, this reduction in share price is not indicative of the actual earnings or revenue for Kirkland Lake Gold. Over the past few years, they've seen really great revenue growth and income growth. Looking at the numbers on the income statement, for total revenue, you can see the substantial growth year over year for the past 3 years when it comes to Kirkland Lake Gold, from 2018 to 2019 to then 2020. Each year seeing great growth from the prior year, and very similar with gross profit, you can really see the growth that Kirkland Lake Gold has seen over the past few years. And now looking at their balance sheet, you can again see that their total assets have been growing really well over the past few years, and their current assets to current liabilities is currently sitting at a ratio of around 2, which is great to see and means they're really set up nicely in the short term. If anything were to happen to the company, they would be able to weather the storm and sustain themselves. And another great thing is that if you look at total debt, Kirkland Lake Gold has almost no debt on their books, which is really nice, and I think again will just help them grow into the future. When it comes to price targets for Kirkland Lake Gold, there's currently 5 analyst ratings, with the low end being at $55, with the average being $63, a 42% upside, and the high being at over $77. So the analysts are predicting that Kirkland Lake Gold will see some pretty crazy growth. So we've covered 2 of the top 3 dividend stocks to buy for the month of April. We've covered 1, which was Enghouse in the technology sector, and 2, which was Kirkland Lake Gold, which is in the gold mining industry, a great way to hedge against inflation if inflation were to rise over the coming months. So now getting into our 3rd and final stock for the month of April, it is in the renewable or clean energy space. I know, big shocker here on this channel, we're covering another renewable or clean energy company, but this is a space that I really think is going to grow heavily over the next 3 to 4 years as the new presidency in the United States unfolds, and just in general as the world heads toward more sustainable and renewable energy sources. So this stock falls perfectly into that space, and it actually offers a monthly dividend, which is just icing on the cake. This stock has been seeing some really great growth over the past few years, and I think it's just going to continue, like I said, as the industry grows and this company grows. It's just going to be a great investment for anyone. The stock in question is Northland Power, ticker symbol NPI. Northland Power is a Canadian powerhouse when it comes to renewable energy, and are most well known for their wind farms. Northland Power is currently trading at $44.80 per share and has a market cap of just over $9 billion. So this is a large company we're talking about, and they currently have a dividend yield of 2.64%. So a very nice dividend, and like I said, they pay monthly, so you'll get some nice monthly cash flow into your account by holding this stock. Northland Power has a nice PE ratio sitting at just above 25, and if we look at their chart over the last 6 months, we can see that they're actually down around just over 10% from February prices. They were trading at over $50 and they're now sitting just under $45. So down just over 10% from all-time highs. So trading at a pretty significant discount. And if we go to their 1-year chart, you can see the steady growth that Northland Power has been seeing as the renewable and clean energy sector grows. And looking at the 5-year chart, you can see that over the past 3 years from 2019 onwards, Northland Power has been seeing some pretty amazing growth and has really sped up over the past year to 2 years. And I think this will just continue as the demand for renewable energy increases, especially after late last week, we saw Joe Biden come out and put forth a plan to invest $2 trillion into boosting up America's aging infrastructure. And one of the key talking points in his plan focused specifically on boosting the production of clean and renewable energy in the United States. This will greatly help Northland Power as they do have wind farms down in the States. Briefly looking at the income statement, you can see the growth that Northland Power has been seeing over the past 3 years. Very consistent growth. And again, I really just think this is going to escalate as we start to see a shift towards more clean energy and renewables. One of the reasons I really like Northland Power is because they have a global footprint right now. They currently have offices and operations in North America, Latin America, Europe, and Asia, and they're really focusing on growth in all of these areas to help drive new revenue and profits. Not to mention, Northland Power currently has 7 analyst ratings for the forecasted 12-month price, the low end being $47, the average being $52 and 16% upside, and the high estimate being $57 and over 20% increase. So there you have it, 3 amazing stocks to buy for the month of April. These are 3 stocks that I really think are going to grow over the coming month, and they all pay that dividend, although it is on the smaller side when it comes to dividend yield. However, it's really just the cherry on top for these stocks as it is their growth that you're really buying into. And again, let me know down in the comments what your favorite dividend stock is for the month of April. Super curious, and I want to see what you guys are buying right now. I hope you guys all enjoyed this video. I had a blast making it. If you did, please hit that like button. It means a lot and helps the channel grow. And as always, subscribe to the channel if you're new. Stay up to date with all my latest content. Lots more coming your way over the next few weeks. So again, I'll see you in the next one.